12/21, 2020 S&P 500 daily. And we were overbought here on Friday, and we were. And I had given a red flag warning when we were up there at 37.26 on the top end of being extremely overbought at the time, and we were. Now we've come down, we undercut, we made a low today in the S&P at 36.36. So they ended up popping it going into the close. The last print was 36.94 on the S&P. So the range on the S&P, intraday range on the S&P 500, 72.93 points. You don't see that kind of range. It only ended down 14.51, and they had jacked it up on Friday with the rebalancing of the triple witch. And then we had the big news that came out. We already knew that news was coming, but it didn't matter. Stocks in the S&P individually were extremely overbought in this rally, and they are, and we're given a red flag. When we see a 72 points or 73 point move intraday in the S&P 500 index, that is that sign of volatility I'm talking about. That is the reason why to sell into these rallies. And it's now is that time and shall be that time. And I'll just let everybody know you're up here toward the high, but we created a daily sell signal as we did on the S&P 500. Merry Christmas to everybody. You can't go broke by taking a profit. And just remember, algorithms took that negative news. Let me talk about that coronavirus. Yeah, that's a new one. Oh, yeah, unfortunately. And I think it's already here in the U.S. That's where you catch the disease 70 times faster than what you could have caught it regular COVID. Okay. And all the vaccine hopes and this and that, and you're getting a stimulus package and this and that, all is good. But here's the deal. You got to know when it's priced into the market, and it is priced into the market. And it is. And the flight to quality is profit taking is coming. Oh, yeah. And this volatility ranges that we had today in these indexes is that volatility. It worked to the upside, but it works to the downside as well. There is more volatility with a red flag moving into year end. We will have light volume, but 2021 is a different story altogether, and it really is. And therefore, we're putting that warning, and there is going to be some big profit taking. There was a lot of fear today. Believe me, there was. And fear starts in the volatility fear indicator. And that thing broke out up to 31.46. Then the algos hit the market with the bad news, and the UK is shutting down. And they'll probably be shutting, travel bans on the British and traveling and whatnot. Listen, the stock market is overvalued. That is the real reason. And the real reason is that you need to sell into it. Taking a profit doesn't hurt. And not only that, when you know that individual stocks are overbought, you know that these markets are not going to get away with the fact that, yeah, you can have all the stimulus in the world. But the market already had that factored in it. And it was priced to perfection. Wasn't like waiting for stimulus a couple months ago when the markets weren't doing great, because they weren't. Now, when you take the fact that stimulus does come into play, how does the market react at an overbought market? It's an overbought, algo-driven market. Beware, be safe, enjoy. But ring in the cash register. We start with the gap down Monday, and the S&P was down at one point in pre-market in the futures, but the S&P hit that low. And if you take the high of 37.22, which was extremely overbought, and then you take today's low of 36.36, we'll do the math. That is the beginning and the warning of more volatility coming. But that volatility is really going to hit with the flight to quality. And the flight to quality in this case is to take profits, particularly in that tech sector. And that NASDAQ isn't going to get away with it. The real concerning part was in the NYSE when they were taking all the profits there today, and they did. And downside volume was 2 times greater than upside volume. That's how it starts. And that means that people in those NYSE stocks will ring the cash register, and they're going to come to that S&P 500, and they're going to ring that cash register again. And I'm not wrong about the volatility. I'm not wrong about overbought markets, and I'm not. And these markets are extremely overbought, and individual equity prices are overbought, which has always been what? Take profits. Take profits going into year end. That will be the flight to quality. I'm given a red flag warning, whether they want to try to pump it up there or not, is the fact that it is overbought. It's ran too far, too fast, and we know it. So, one of the things that we always want to make sure of is that we take a look at the volume pattern on it, and we did. And you had 23.4. So, lighter volume, testing the 10 and the 20 as stocks do test moving averages. We did it all the way across here. But bigger volatility is coming. Markets ran too far, too fast. Be very cautionary in what you do from here on out.